Surjit Pal is joining us. He's pharmaceutical analyst with Prabhudas Lilladher. Surjit, good morning. Good to have you with us here. Okay.
Hi, good morning.
You look bright and happy, Surjit. Good to see you sporting bright colors. The sector though is your sector though is seeing a bit of turbulence. With Lupin numbers.
It was.
Yeah.
I think it was supposed to happen, and for some company it has already happened. For some company it has been delayed, but this kind of things is bound to happen after having such a long success. So somewhere or the other you have to take a pause. I think most of the top line pharma companies has faced that kind of scenario. So I think next year to 2 years time they will recoup those guys who are spending R&D for a long time.
How much of the miss, now that we have had some time to look at the numbers in detail, how much of the miss is because of lack of product approvals and how much of it is pricing decline in the US?
See, as far as my number is concerned, the top line miss is around 3%, but the bigger miss is in the EBITDA margin and PAT. My PAT is missed by 21%. I think I was one of the lowest estimates for PAT, which was roughly around 520. And I have seen that average in two other areas where I think roughly around 570 to 600 was the average market estimates for PAT for Lupin. I think from all that perspective, the issue is that somehow they manages volume in US, but the point is that the impact has come on the margin, and that is because of price competition, which clearly shows in the margin. So that is one, and 30%, this is 40% of the business. 30% of business comes from domestic, so that is also not giving much of growth. So I think 9% growth is from Lupin was never been unexpected. And then that is what management is saying, is that acute therapy growth is not coming through the way they were expecting, which is basically 3% for the 30% of the bucket in domestic portfolio, which is basically dragging the overall growth of the domestic formulation. So overall, this year they have got as of now 13% growth in domestic market in first half. Management estimates that they will get overall full year of 17%, which means then they need to have a growth of more than 21% in second half, which for me may not be possible. My estimates for full year will be around 15%, which gives them around 17% kind of growth in next 2 quarters, which is possible.
No, 17% growth for the full year on the top line?
In FY16. In domestic formulation.
Domestic formulation. And this quarter you said that's grown 3%.
This quarter they have grown 9% in domestic formulation, and the reason for 9% growth is basically the drag of acute therapy, which has been growing around 3%, and acute therapy contributes 30% of the domestic formulation business.
Okay. But the big one still is the US, right? I mean, no, if you look at the bigger picture,
yeah, that is 40%
still the US.
of the business.
Yeah.
Yes.
So what is really going on? I mean, why is pricing suffering? Is it a company specific issue, product specific issue?
I think it's about the product specific issue, I would say. I mean, if you compare Dr. Reddy versus Lupin, I believe Dr. Reddy has been getting a much lower number of approvals if I compare Lupin. And if you go by the big product approval, even that is also bigger for Lupin vis-a-vis Dr. Reddy's. But if you see, Dr. Reddy has been holding the ground despite being very low number of approvals, and that is also a very low number of approvals in key products, because the number of approvals they have been getting is in largely complex products or complex technology product, which is holding pretty strong ground for them and limited competition. So these are the two key things which is actually helping them vis-a-vis the peers. So as a result of it, even if they are not getting much of approval because of the issues in their Vizag plant, but still they are maintaining their margin, still they are maintaining their top line growth in US. While if I compare Lupin, they are out of the top 5 products except Waterman. Rest of the 4 products has seen serious price erosion. For example, in FY15, their biggest contributor was Cymbalta, and it contributed roughly around, if I'm not mistaken, $90 million. Right, and second one is Fortamet. After that, it was Niacin, then Tricor. So what happened is that out of the top 5 products, 4 product is facing severe price erosion, and then also there is Suprax in top 5 products, which has been hugely eroded after entry of Aurobindo. So what happened is that all these products are facing problem. All these products were very high margin business earlier. So as a result of it, you will see this erosion even in the next 2 quarters.
You began by kind of hinting at the fact that the best for the stock price may be behind for Lupin, right?
Yes. Yeah. At least for
do you expect it to derate significantly from here?
See, mine estimates of earnings as well as target price is much lower than the other peer brokers. Earlier it was 1530. I reduced it by 6%. Currently mine is 1419. And I have reduced my earnings for FY16 by 15%, FY17 by around 13%. And I believe that the recovery of margin as well as top line may not be fully commensurate to the loss of margin and the sales in the key products.
Okay. What is your price target on Lupin, Surjit? Sorry, I missed that.
1419.
Okay. Now, what does it mean for other pharma earnings? I mean, should one get worried for others?
Of course, yes, but in pharma sector, more than a sector specific, it is major part of it is a company specific. So, for example, for Dr. Reddy and Glenmark, if I have to look into it, their concern is not about US, their concern is about Venezuela and Russia. For a guy like Ranbaxy, I mean, now Sun definitely has a much bigger exposure post acquisition of Ranbaxy is in emerging markets. So the fall in prices of those emerging market currencies is definitely an added dimension for Sun Pharma valuation. So I think every company has a different perspective to look into it. So unlike other sectors, I think pharmaceutical sector has that kind of feature where you have to go company by company.
Glenmark is one of your top picks, right, Surjit?
Glenmark is one of my top pick in mid-cap, yes.
Should it report will the numbers be strong this quarter?
I think number will be better off than Q1, but it may not be strong per se, because Venezuela and Russia keep on bothering them. They will be better off in US revenue. Their US revenue will be much better than Q1. I think from 85-88 average per quarter revenue from US, they will jump into the range of $90-95 million per quarter revenue from US. So that is progress in the right direction.
Okay, fair enough. Broadly, we've obviously also been following what's happening to US pharma companies, right? I mean, everybody bought those names thinking, well, there's no little international risk and is and that sector also in the US had a fantastic run. But top 10 pharma companies combined have lost some $250 billion in market cap from the July highs. I mean, there's company-specific issue like Valiant, etc. as well. I know, I mean, it's different market, different companies and all of that. But is there something to be said about what's happening here and risks for Indian US-focused companies?
I think it's more of an issue of normal wear and tear in terms of market. What I meant by wear and tear is though most of the investors, particularly institutional investors, I got a feeling over a period of time, they don't want to accept. Even if they accept, they don't want to accept in the numbers. Is that this golden run of challenging the patented product and getting their approval and make a hay over it. Those days are slowly and definitely is going away. Now, in the next 2-3 years' time, the situation will be totally different when GDUFA will be very much in place and USFDA is no more on a backlog. So what does it mean is that you will not have much of product. You will not have much of product to challenge. And even if you have, those products are not that big. So we are shifting towards more of a biotech product to challenge. And you need to have a very good R&D product by that time to get into those. And also you have to get into more of an NDA product. But again, NDA product is very subjective and it all depends on the quality of your R&D and the focus. So once you miss that step, I mean, you might be spending less on R&D or you might be strategically targeting the wrong segment or strategizing or visualizing the wrong thing. For next 2-3 years you are gone. So you might be on the brink of being sold or being acquired. So that will be a very interesting time. I mean, I found is that some of the companies, for example, like Lupin, you will find there are many peer brokers are supporting their earnings and numbers by shifting into FY18. But the point is that if I take for next 2.5 years, which pharmaceutical company is not buy for that case? Any pharmaceutical company, you don't have to be Einstein to that. And you just put your finger that everybody will be buy, because by this next 2 years time, GDUFA will clear almost every backlog, by USFDA. So everybody will get a lot of approvals which has been pending for a long period of time and everybody will get good revenue push up. But after that what? After FY18 what? So that is where, the situation will differentiate the guys from the, or the men from the boys. That is exactly, I think, we should have a look into it if I believe in long-term investment in pharma sector.
All right. Thanks very much, Surjit. Great speaking with you. It's always a pleasure. Thank you.